Got Megan Brantley, Vice President of Research at LikeFolio. Megan, thank you so much for joining us this Friday. Happy Friday to you. You've got new sentiment data on Carnival. The stock has been an outperformer year to date. I missed this one because I've been across Royal Caribbean more. Tell us about your latest data, what that shows you with trends.
Yeah, so we have really nice insight into cruises at large because consumers love to talk about cruises. They love to talk about their experience on cruises. And so when we look at this, I think to hit on sentiment first, I will say there's been a bit of a slip in sentiment for Carnival across the board. At large, the sentiment is down about 7 points on a year-over-year basis. And this for us is really more of a long-term indicator. When we look at this and we start to see this slide a bit, it starts to be a little bit troubling on our end because it suggests that overall experience when it's as great as it once was, and this could impact future bookings. But I'll say another really interesting indicator is also web visits because obviously consumers are going online to book these cruises. And so whenever we look at this, this is a really nice, gauge of future demand. And I think that this comparison that you see right here on this chart is interesting because you can see a pretty steep divide when it comes to, that forward-looking momentum for Norwegian versus Royal Caribbean versus Carnival. And while Carnival isn't negative, it's up by 1% year over year, it certainly isn't keeping pace with the momentum that we're seeing in these other names, these other peers. And it's a bit of a slowdown from what we've seen previously. So I think that this is something to watch, especially alongside the stock that's trading, near highs, that, this is some divergence forming where our data is starting to stall and head in a little bit of a different direction than the stock is heading.
It's interesting, Megan. We talk every day for the last 3 to 6 months how consumers are trading down, right? Shopping at Walmart, Costco, Amazon, away from the retailers. It looks like your data says when it comes to travel, and in particular cruises, they're trading up to the higher ticket prices because Norwegian Cruise Lines, Royal Caribbean, they're the higher ticket price than Carnival. So is this kind of a reverse engineering with the consumer cheaping or going for cheaper food, but they're going for more expensive cruises, Megan?
It's really interesting, and this is something that we wanted to test because we have seen that trade down effect in place for a lot of names like you mentioned, but it seems like travel is one of those areas where really that premium experience is winning. This is an area where consumers aren't there to splurge for what they perceive as higher quality, and I think that it's really indicative there when you see that list of ranking of which cruise lines have the most momentum. It's ordered in the order of the highest ticket price down to the lowest ticket price. So far we aren't seeing signs of that trade down effect. We are seeing signs that potentially maybe consumers who don't have that high income aren't necessarily pulling the trigger to book that trip quite yet. And thus far, those higher earning consumers are still opting for the Royal Caribbean or the Norwegian versus that value perceived peer. And that's really where Carnival finds itself. So it's going to be very interesting heading into this earnings event because we feel on our end, expectations are pretty high for Carnival. The company had a great report last quarter. And so it could set up a nice bearish play, at least according to our data, especially when we see that sentiment sliding alongside that demand momentum.
It would be interesting to see that because, as you mentioned, they've got earnings coming up at the beginning of next week. UBS put out a note yesterday saying that they think that Carnival has the potential to post some better than expected guidance based on what they're seeing on booking trends. And the Celebration Key destination, some early indicators on that. This is the destination in the Bahamas that they're seeing that. And then I see all the viral videos online, and those viral videos tend to be Carnival cruises. They look fun. I have to say that, the Royal Caribbean looks like they're very glamorous. The Carnival ones look fun. What are the indications that you see as it relates to, are they maintaining their customers and expanding, or is it just the current customers with regard to Carnival?
I think you made a really good point on the Celebration Key. That's certainly been a driver in our data of late. I think that that's the reason that you don't necessarily see Carnival cruise demand in the red because we did see some significant traction I think that island launched in July, I believe, and we saw a little bit of a bump in July, a little bit of a bump in August, but we just haven't seen that continued pull through in September. So our data, I would say, really that loss of momentum is really in the month of September. And so that could be troubling for guidance, but it is a fun environment, as you mentioned. When we look at the mentions of consumers who are talking about Carnival versus Norwegian versus Royal Caribbean, it's a very different environment. People are often talking about Royal Caribbean, like you mentioned, this a glamorous or even more of a family that's booking with lots of different pools and water slides. And, I'm sure we've seen lots of mentions about the Icon on the Seas. It's basically a theme park on this major cruise line. And Carnival, on the flip side, is seen as more of that value play and more of that, if you still have fun when you go on the cruise, but definitely some also mentions creeping in there of overcrowding and perhaps some subpar service. And so I think it's something to watch, and our expectations are just tempered a bit heading into this earnings because we're starting to see a little bit of divergence to what consumers are talking about and maybe what the market expects.
Megan, looking at your web visits page, am I getting this right? We love to report and talk about LikeFolio's data when it diverges from the price of the stock. Is that what we're seeing here, or is this a web visits starting to follow the price of the stock as it looks like it's peaked out a little bit? Describe for us better the web visits page. Is that looking diverging from each other, or are they starting to line up a little bit?
Well, I will say that it's not necessarily great whenever you see one company trailing peers in a significant way. That's a pretty significant gap when we're looking at forward-looking momentum, and in our world, that's not necessarily a great indicator. But on this chart here, this is actually a little bit of divergence. Carnival is very seasonal. Cruises are very seasonal in general, so you have these peaks during wave season, which is, you can see on the chart, closer to the beginning of the year, and then you also have peaks as people are preparing to go on their actual trip in the summertime. And so you're seeing those kind of double peaks there on that chart. But at large, we're starting to see a bit of a pullback in terms of momentum, in terms of growth versus how the stock is performing. So for us, this is setting up a bit of a bearish play into earnings just on a high bar of expectations and a bit of a slowdown in that momentum.
It would be interesting to see that because, listen, off the back of their most recent earnings, they did beat expectations, but shares actually traded lower. So sometimes even if you see a beat, the shares can have a different response. So we'll be watching that one and across that one. Thank you, Megan, for bringing the latest LikeFolio data that you all have this time on Carnival. That's Megan Brantley, Vice President of Research at LikeFolio. Now for the trading